Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to this special edition of the Midweek Takeaway, where we dive deep into the thriving Zambian copper industry with an exclusive interview featuring Leon Coetzer, CEO of Jubilee Metals, and insights from our esteemed resident journalist and investor, Charles Archer. Today we're handing the mic to Charles to discuss the compelling trajectory of Jubilee Metals in the copper sector, highlighting their strategic expansions and the recent bullish moves by their management. Stay tuned as we explore the impact of these developments on the market and what it means for investors. Join us as we unravel the dynamics of the copper industry through the lens of Jubilee Metals' robust operations. Over to you, Charles.
Thanks, Phil. That was great.
Thank you, Phil. Thanks for the opportunity.
Good afternoon, Leon. How are you today?
I'm good, thank you, Charles. Good, thank you. And thanks again for the opportunity to discuss Jubilee.
Well, always a pleasure. I found saying just before we started that August is a month where I tend to take time off and go to the beach and do not much. But Jubilee, among many other companies, have decided to release lots of material news this month for some reason. Apparently no one's allowed a summer. But there's good news and then there's mitigating news. And I guess, the first question in my mind, it has to do with, fantastic news on Roan. Everything's upgraded. Everything's all systems go. And yet, in your recent quarterly update, I'm trying to find it, we were looking at production guidance, copper units production, between 5,750 tonnes and 7,500 tonnes. So, that's potentially a 120% year-on-year increase. And yet seems far lower than what the target could be. Why is that?
Excellent question, Charles. Yeah, no, I think it's a great opportunity to actually clarify what influences those guidance. And maybe to answer it accurately, I'd need to just take a step back and explain how are we implementing the current expansion of our copper production. Because if you take Roan, which is, of course, two components, right? You've got the Roan front end, which makes an independent concentrate that is refined or sold. And then you have the Roan back end, which processes tailings and waste and makes a concentrate that can be either sold or refined at Sable. So that's Roan. So Roan's actual capacity is quite significant. And then, of course, you've got Sable, where we're currently expanding that refinery by commissioning a second tank house to plate copper and make more copper cathode. And that project will be run over the next couple, 2-3 quarters as that tank house comes into fruition.
Yeah.
So when you look at Jubilee's processing capacity, Roan plus Sable, at the completion of this upgrade, we have passed 25,000 tons of copper per annum processing capacity.
Right.
That's what we sit. It's now how do we utilize this capacity? During the interim, we've explained that while Roan is now upgrading and ramping up its production, most of its concentrate will be processed and refined to copper plate at Sable, so that the capacities aren't added, but in fact the Roan production is plated at Sable.
Okay.
Until such time as Sable's capacity is fully dedicated to our mining or open pit operations, of which Monkoy is the first, Project G the second, and we really hope to bring to the market the third and the fourth acquisitions in the coming near term as those negotiations progress, because once we've completed the full upgrade or production upgrade of Monkoy and a third that we are targeting, all of Sable's capacity will be taken up by this small scale or open pit operations. It means, therefore, Roan's production is in addition to what Sable makes. And therefore, I'm looking forward to bring to the market that progress, because as Monkoy now expands, as Project G now expands, it will squeeze out Roan's concentrate out of Sable, and we'll trade that in the open market, and that becomes additional copper units sold. And that'll upgrade our projection of copper. And the reason we've really given that range is copper, unlike South Africa. South Africa is a mature business. It's 1.5 million tons of chrome concentrate. It's got organic growth that it's self-capitalizing through its earnings. And therefore, to give its operational targets and forecasts is a very accurate and high confidence. While in copper, we are commissioning 3 very exciting projects coming into operation, bringing them into full operation, processes that are, unique to the area, but not unique to metallurgy or Jubilee. So that certainty of its ability to produce will reflect in the numbers as we upgrade those targets during the course of this financial year. And that's the rationale behind those targets.
Right, so effectively, this sounds good. I mean, it sounds to me like this copper production guidance between 5,750 to 7,500, you're hoping to upgrade that significantly over the next 12 months then, or even within the next 3 to 6.
Quite correct, Charles. I mean, if Monkoe continues to expand as it is, and our Project G comes into full operation as we're pushing really hard, the first tons are arriving at the Sable refinery, I would expect to upgrade those guidance numbers, yes.
That is wonderful to hear, and that hopefully put a lot of worries to bed. Because, I guess, people invested in Jubilee have waited a long time, and you've delivered on Roan, you've delivered on Sable, you've delivered on the Chrome. And now it feels like it's time to reap the rewards. Whether that time is now or within a few months, I think 2025 will be a very good year for you. I mean, one of the things that I noticed in the Q4 update was at Roan's front module, the results you have, you're indicating a 10-fold copper grade upgrade into concentrate from the previously mined material. The 10-fold is that beyond your expectations? It feels like it might have been potentially.
Yes, it is, Charles. And then why that is such an important number, it means we're taking previously mined material that was discarded as overburden or waste or too low grade, and we're upgrading it well beyond high-grade run-of-mine material. So we're upgrading it into a concentrate that at 11% is, of course, superbly, it's a great material for refinery, but also tradable already at that level.
Yes.
More importantly, is that gives you an indication of what can be done with waste rock project, which we've secured, which, more than 260 million tons of this material, which is great. Previously mined waste. It is the exact material that we are now running at Roan. So Roan is a prelude to what can be done at that project, where you can, where we look to build 4-5 Roan front ends onto that waste rock project. And that's the significance. So if you look at our profile, Roan is dedicated to processing waste rock or previously mined material, as we call it, and waste from process, while Sable is becoming dedicated to be processing and refining open pit mined run of mine. That's why the front end of Roan was so important to give the confidence to the waste rock project.
So, okay, I mean, with the RH project, it sounds to me almost, and maybe you've given me too much information, I don't know, that before it all gets signed off and ready to go, they wanted to see that Roan would work. And now it is showing that it's working. Do you reckon that's now going to see some quick movement?
I think two things are going to happen on that. It proves that what we had done in the laboratory and in our pilot scale units inside of our development center, which projected or predicted the performance of the Roan front end, is accurate.
Well, theory and practice are two different things, aren't they?
Oh, very much so. It's a great confidence booster that it's accurately done, brilliantly done by our technical team, that they got the numbers right through our laboratory and development center. It gives the confidence that what they've done in projecting and modeling the waste rock project would equally be accurate for an incoming investor. But also importantly, I think it's more than just IRH. I think quite a few investors will be taking note on that accurate translation from laboratory to commercial.
Yeah.
Because the waste rock project is large. There is space for many people to participate on that project of the sheer size of that project.
I guess, that's only one waste copper dump, or several waste copper dumps. Zambia is filled with them.
Yes,
hundreds. And it goes on to my next question. I mean, as far as I know, you're the only operator in Zambia that can process this very low-grade waste material profitably. I guess there's two questions. The first is, how do you sleep at night thinking other people might try and steal your thunder, come in, do similar, projects? Do you have patents for the technology that you use, for example? And then beyond that, how quickly do you want to expand it beyond what you already have?
Excellent, Charles. Yes, I mean, we're in an industry that often is filled with people who believe what they can do, but very few have demonstrated that they actually can do what they say they can do. And that's a distinguishing factor. I think there might be a few companies out there claiming that they could do what we do on waste rock projects, but none of them have actually done it. That's a critical factor. It's a critical milestone and hurdle that you've set for people to enter. So the barrier to entry is being lifted all the time. Coupled to the fact that many people speak of community involvement, what we've done at Project Monkoi is really turning that on its head by upfront investing into our communities and developing various community projects alongside Monkoi, again, setting the barrier to entry slightly higher. Yes, you are right that we cannot be sitting back and enjoying the glory for getting it right, because others might come and do it faster with a bigger balance sheet than we've got and secure those resources, which is, we've now proven its viability and commercial reality before we can.
Yeah.
And therefore, that is our priority now as a company, is where previously our priority was to demonstrate that we can extract the copper out of these resources. Our priority now shifts to secure the resources, or secure at least a lion's share of that resource for our future. And that's a big driver inside of Jubilee at the moment.
So let's say, you know, I've seen processing plants be built. I've seen them be upgraded. I've seen them ramp up, and the ramping up tends, you know, in my experience anyway, tends to take longer than what people think initially. Might not be the case of Jubilee, but generally, anyone will tell you that's always longer. So let's say Roan takes a little bit longer than you expect. How is this going to impact on copper production targets? What kind of contingencies do you have in place?
Oh, quite a few. I mean, the biggest contingency we've got is, of course, open pit operations. Monkoi, Project G coming in, both extremely exciting projects. And if you look at our website on the videos, to just give to give you the view of the size of these projects.
They're massive, aren't they?
They are very large, and they are able to go much larger and be ramped up very rapidly. Monkoi, and we'll be bringing out that news flow into the market for the market to understand the significance of the Monkoi. And it's just one example of where you have a reef that is, you know, as shallow as 5 meters below surface, runs for 45 meters continuous in depth, never mind its strike length. And our ability to take that material, which is regarded as complex, and successfully plate it into copper is what unlocks those opportunities. And Sable is the only refinery in that region that can process that material. So there's another barrier to entry that is set. And that's why we have to go and secure more Monkois rapidly. We know which ones we want. Technical teams have reviewed the ones we should target. It's now up to us to be commercially astute to secure that.
You have to do it now, because other players want, now they know that it's possible. I don't want to say you've shot yourself in the foot, because you have to do it, but everybody else is going to jump in. So you've got to be quick.
Charles, it's a vital lesson we've learned in South Africa. If you look at our South African business, we spoke about what we could do in chrome and in chrome reefs and in fine chromes. No one believed us. And we implemented the processes on other people's resources, proved to the world this is what can be done. And once we proved it, it suddenly upvalued those resources significantly. So by the time we were able, with our balance sheet growth, to secure those resources, we could at best partner with those resources. It's a very dear lesson to have learned that in Zambia, we need to be faster. We need to be bolder to secure these resources earlier, now that we know we can back our technical team in getting it right. And that's vitally important. Today, we made 1.5 million tons of chrome, which most of that chrome comes from reefs people had thought were waste.
I mean, this is the thing, you know, anyone listening, this is not a PGM company. It is a chrome company with copper growth. So with Roan in particular, I mean, you talked just now about the downstream refining that you're potentially planning. That's going to mean more capital investment. How are you going to balance that when you've also got these growth opportunities where you want to, you know, secure copper growth opportunities quickly, and then you've got other bits and pieces in the portfolio you're still growing the chrome as well? How important, I guess, maybe is the best way of putting it, is expanding Roan's downstream refining at the moment?
Well, there's a couple of strategic drivers. It's important because you do give away margin by selling your chrome as a concentrate, but you still are selling copper units.
Copper, I mean, yeah.
So from a strategic initiative, if you are short on capital or short on investment, priority number one is secure the resources, secure the opportunity, which drives your processing expansion. On the back of those resources, your fundability of expanding the resources or expanding Roan's refining component becomes far simpler. because you have such a strong balance sheet of resources that you've proven you can extract and recover copper from. And there are many ways. We've kept the Zambian balance sheet leveraged. We have not sold the future copper production through any trade financing in Zambia. So there are many, many levers we are able to pull on this opportunity. And in many ways, it might even be better for us to secure as many of these opportunities as possible, even if it means we don't wholly own them, but at least own the majority of them.
Well, it's feed, isn't it? It's feed for the plants. I guess the question is, you'll get to a bottleneck eventually. You hit your 25,000 tonne per annum target. You may have, I'm talking, a couple of years from now, you may have more copper projects than you have processing power. I think it was back in February or March, local media was reporting that Jubilee was interested in buying the Chambishi plant. Can you comment on that or not yet?
Well, what I can comment on is that absolutely, if you look at our mining expansion and what Roan brings and what the waste rock project brings, it's obvious that not even years away, but months away, we will be running out of processing capacity. We will be hitting our 25,000 tons potentially, and therefore we need to find more refining capacity.
Exactly.
Chambishi is one of those examples. Chambishi is unique in that it's a refinery built for a specific purpose that no longer exists, to process materials from the DRC and other sources. So it's a refinery that is a brilliantly built, well-maintained, in care and maintenance refinery, but it's got no feed. But it's not the only option. There are other options as well.
Well, I just think because it's in care and maintenance, you need processing power, for the near future. And there's a plant there which isn't being used. It feels like there's quite an easy synergy. You don't need to be a financial analyst to understand. But I guess potentially you do have to be political with that answer. Yeah.
The reason would be quite simple. The drive to secure, and you're quite right. From a strategic point of view, it looks obvious. The drive will be the resource. It's the expansion of our resource portfolio that drives the expansion of our processing footprint. And those timelines is often quite key. To get in the perfect world, you want, as you're ramping up your operational resources, you then want to acquire a ready-to-go refinery.
So I guess, everything that we're talking about sounds relatively expensive, Leon, to be honest. And you know what? You've got to spend money to make money. That's fair. But if you look at the share price, and it seems obvious to me there's an active seller in the market, which you can't do anything about. Nobody can. But I guess the question is, this further capital investment that you're planning, would it be better to deliver a dividend to investors instead? Or do you think the opportunity is so big you just have to go for it now?
The opportunity set and the potential value that this opportunity set offers us, I would definitely view outstrips the value of a dividend at this stage. I do, however, if you look at our capital return and the timeline between investing capital and making returns is so short, because not developing underground mines, it takes 7-8 years. And Munkoy was brought into operation within 8 weeks of buying the property. So your timeline to dividends isn't necessarily years away, because you are going through a capitalization of securing resources and expanding operational footprint, because your timeline to earnings from this capital is so short.
It does seem to me that you're relying quite heavily on partnerships for material supply. So some of the assets you own outright, or you own majority, but you're relying on quite a lot of the time on I don't want to say weak contracts with partners, but contracts that potentially are not sort of ironclad. How do you maintain this kind of reliability and consistency that you're going to get the feed you need for the plants?
Excellent. No, absolutely, Charles. It's again, if you compare our businesses between South Africa and Zambia copper, in copper, we own the resources. We own the Munkoy, we own Project G, and we own the Waste Rock project, which is the anchor suppliers of our future growth. Yes, we have partners outside of that, but the anchor, by far the majority of our future supply, is through direct ownership. In South Africa, you're right. We have partnership agreements, and therefore our efficiencies, our ability to consistently perform with these partners is our ticket to success and repeatability and continuity of those contracts. So it's a very different reliance. Both areas, of course, efficiencies is critical, but in South Africa, it is the efficiencies that is the reason for our partners to now take 3-year contracts and extend them to 10-year contracts because of all the value they get.
The only thing that in the financial results I haven't really I couldn't find the margins on the chrome, on the PGMs. I mean, last I looked at them, even at the prices, chrome is doing well, PGMs not so much. But are the margins still healthy, still profitable? You're still running at a profit? Every pound you take out, it's going well?
Yeah, so in South Africa, as we told the market before, as we migrated from that fixed toll agreements, which run roughly between $3 to $6 a ton of product we made. It was a nice buffer to any prices. We had no price exposure on the chrome. We've migrated to nearly 40% of our production, and we target ultimately to have the majority of our production come from our partnered agreements where we take exposure to the market. So we take a greater earnings position in chrome. So our margin in chromes will constantly grow. And we were at $3-4 a ton 2 years ago. We breached $8 to $9 a ton last year as that component of partner material grew. And if you extrapolate to what you can expect out of the financial results that is due for release in the next couple of months or so, one would expect the margin of chrome to grow because that amount of chrome is constantly increasing versus keeping constant our tolling agreements. So that's a very important part of South Africa. South Africa remains therefore profitable. It's capitalizing its own growth through its earnings at the moment, which is a great position to be in for South Africa. It's a vital decision we took to take greater exposure to chrome as we saw the PGM market softness coming in, to ensure that our company takes full benefit from its chrome exposure and the amount of chrome we make.
It was 2 million tons is the eventual target, isn't it, in the next couple of years? I guess, I look, 5 years, maybe even 10 years in the future. You hit 2 million tons, all your dreams come true. Where next? What's the plan for South Africa after that?
Well, the reason why we said 2 million tons is because we know it can be achieved over the next 3 years for chrome. And at 2 million tons, we are the biggest chrome concentrate producer in the world. And that brings with it a number of benefits. And we already are negotiating direct agreements between ourselves and the end users. It ensures that our clients see the benefit from a stable producer. We see the benefit from a stable client on our chrome side. It does also mean that South Africa is getting to a position of full fruition. The company has evolved from exactly as where copper is today, where opportunistically we saw opportunity to process waste. That back door that we got open got us into the industry, and from there we migrated into processing waste as well as mined open pit material. Sounds very similar to Zambia. And that mined open pit material is the one that just exploded the growth in South Africa. Exactly the same as what we pursue in Zambia. So South Africa comes to full fruition. It is a company that makes strong earnings, and growth is really looked towards copper. It's where we're able to grow 3, 4, 5-fold in production output rather than percentage increases in South Africa.
So, going back to Zambia, because this is you had an RNS come out, when was this? Quite recently, 27th of August, securing a private power purchase agreement. So with PC, it's an independent hydro and solar power producer in Zambia. Competitive rates to prevailing power tariffs, and the option to secure a further 10 MW of solar generated power discounted by more than 30% below the initial power purchase agreement. Do you know, I read it, I've analysed it. How did you get this deal? It seems, in my mind, too good to be true, especially everyone's after power in Zambia. And I guess Roan actually, I remember Roan having to sort of shut down for lack of power in the past. Because it's not going to be a problem anymore.
Exactly. I mean, no, absolutely. Power in Zambia is a vital component. If you have a project and you can't answer the question on how you're going to power it, you don't have a project. Because in Zambia, they're facing their drought. Most of the power is hydropower. And there's a real shortage of power in Zambia. How do we get to this kind of contract? It's the team we've got. We've invested up front, and many people don't quite understand that until they try and enter a new country. We up front made the investment of a significant quality team in Zambia, more than 400 people already in Zambia, led by a very strong leader. And within that group, the power group started more than a year and a half ago, negotiating and securing a private power supply, initially as supplement power to what we get from the Zambian ZESCO. And as the drought hit, we had to accelerate those negotiations because even if you have a secure power agreement, the word secure is still not very bankable. Our supply. So it really was driven by an innovative team negotiating a partnership with the private power company on them buying into our growth, where we're going, seeing us as a stable client of power and growing client of power. And that's how the two companies met in the middle, to on the first hand secure immediate power needs as of the 1st of September. The second component was so critical to us is if we're going to, you asked the question earlier, if we're expanding Sable, more power. If we expand Roan, more power. We couldn't tell the market that we're doing this without knowing that we have a secure power source to feed that expansion. And no better opportunity to do that by utilizing and going full into what they call the green power and going full renewable into solar. Solar alone doesn't work because what do you do at nighttime? And that's where we combined solar power with hydropower so that we have both the daytime and the nighttime secured. And then that's what this agreement, and I'm sure being one of the first done in this style, it sets a model for others now to follow.
I guess it's obviously you wouldn't be exposed to oil, gas, whatever electricity prices. This is all going to be set pricing then that you've already pre-agreed.
Correct. Quite correct, yes. The solar power is linked to the capital that'll be expended to construct, which is happening as we speak. On the solar, quite correct. On the hydro side, it's a very CPI-related increase rather than gas or oil-related increases.
It was back. This is only really possible because back was it early June? The Zambian government, they held this cabinet meeting and approved the new open access regime. So private players like yourself can access the electricity transmission and distribution lines in the country. I'm guessing the 11th of June 2024, the day after, you picked up the phone and gave them a call, potentially?
Oh, absolutely.
Something in the works for a long time before.
We were really thankful, a very progressive style that the government has taken to de-link and decouple generation from transmission. So the one thing is securing a power offtake agreement with a private company, but how do you get the power electricity to your facility? You have to use the infrastructure that exists on power lines. So it is a vital component of legislation to allow a private company to wheel their power across another network to your facility. So you could utilize that power. We're fortunate. We are also in part of our agreement, we are installing a dedicated power transmission line from the power station to Sable so that we also become truly independent on the transmission side to Sable.
I guess, my concern maybe isn't the right word, but obviously you are the only ones who can process this copper. As you say, others are going to come into the region and try and do it. Whether they'll be successful or not, I don't know. But, money talks. How much investing are you doing into R&D at the moment to keep that competitive edge? Because you want to be the case chicken and fox, isn't it?
That's, significant. Look at our balance sheet. When we release our results, look at what they call the intangible side of our balance sheet. It's the amount of earnings we are plowing into research. I've met in my career so many companies who claim to know and who believe that it is easily done. If you do not invest into your R&D years in advance of actually implementing the solutions, you are always chasing the company who's leading. And that takes your eye off the ball of innovation. And we are, if you look at what we do as a group, even in South Africa, as good as our chrome operations are, under the leadership of Bertus, COO in South Africa, we are plowing still significant funds into constantly driving that efficiency even further. So when other companies claim they can do fine chrome, we've already moved on to ultra fine chrome, recovering that. When they claim they can take 30% chrome and mine it profitably, we get 26% chrome, mining it and making it profitable. So it's constantly driving and setting that innovation in the group. It's part of what our DNA is.
You sound like the CEO of NVIDIA, to be honest, with microchips, constantly one step ahead of the competition. No one can catch up and it's too late. This is how it feels to me anyway. And again, at some point, PGMs will recover and then your profit margins will just be fantastic. But the thing is with Zambia, I've been following Zambia for years. I'm still relatively young. But President HH, his reforms, both tax, regulatory, all of it, fantastic. But it's only been in the past few years, I would venture anyway, that Zambia has become really strongly investable again. What happens if a new president comes in and 5 years' time, and with some whacking great taxes or new environmental standards or new mining regulations, how do you prepare for that? Hopefully you won't need to, but how do you prepare for it?
It's like in most countries, and especially if you compare Zambia to other countries that has a strong reliance on mining, a very strong reliance on mining. It's striking the balance between what's right for Zambia and what's right for the investor to invest into mining, because mining needs significant investment.
Yes.
To be sustainable. And one thing about Zambia, even through the various leadership changes, is a relatively consistent legislative framework. There hasn't been significant shifts in policy. It's more been the implementation and adhering and enforcing policy that has changed. Yes, there's slight shifts that's come through in the power trading side, in the way that capital is allowed into the country and managed to be able to extract your capital out of the country. So key management or key preparation in any country such as Zambia is constant engagement with leadership, constant engagement with the government to understand what is their thinking, what's their motivation, and then prepare your business for that. For example, we know when we do our transactions on open pit mining, the law requires a particular participation of local Zambians. We've gone beyond that law, expecting that law to potentially be evaluated in the future. So it's preparing for what is inevitable in that country. You can't be prepared for everything.
No.
But the one thing we do know as well is that now that we have our clear focus, is if we can rapidly secure, rapidly implement, it makes us so much stronger to weather such potential shifts in the country. But I think it will be very unlikely that there will be a significant shift in policy, economic policy, or mining investment framework in a country like Zambia.
Well, the president just did a 3-4 day tour of the Copper Belt. Was that last week? Were you invited? Did you say hello? No.
It'd be wrong for me to discuss my relationship with the president, but we have a very open dialogue with him and the leadership.
Wonderful. Okay. I mean, that answers the question, even if you can't answer it yourself. Okay, so you're in Zambia, you're in South Africa, but it strikes me that the technology that you have could go all over the world. Botswana, I think, potentially might be an obvious next country to enter into. But, there's waste dumps everywhere, whether it's Ontario, Nevada, Western Australia. Do you have global plans? Are you ambitious to go that far, or is that far-flung future for you?
No, I mean, we've as a group, as you know, through consultation with most of the large companies out there, we've reviewed portfolios in South America, North America, Canada, Australia, India, Europe, Africa, of course, Namibia, Botswana, DRC, Zimbabwe. We've reviewed that, so we have a good sense of what's out there. But we also have to be focused. And as much as, yes, we have aspirations that go beyond South Africa and Zambia, but we also fully realize that we need to deliver Zambia now first. And that's not years away, that's months away. Once you've delivered Zambia and you've got yet another success behind you, in addition to South Africa, it opens up the boardroom doors globally. Mining companies, recognizing that you own not just great in South Africa in chrome and PGMs, but you're able to replicate that into copper, nickels, lithiums, it's endless, vanadiums that you're able to do.
All the critical minerals. I guess it follows on my next question. Instead of just doing it yourself, could you just license the technology that you have to other companies? Is that something you've considered?
It's something that we were considering at the creation, definitely not where we are today. It's not the technology that's the success. It's actually the implementation and management of the operations to drive it to a success. That's the key success driver. Mining companies are traditionally not in favor of paying for a license that they wish to use. They are wired to try and do it themselves or partner with a company they hold responsible, not for the license, but to deliver the product that the license supposedly can. And that's the difference where our focus lies. We're banking our processing techniques, but more so we bank our operational skill.
I'm glad you said that, because now how many times do we see like an ore sorting company, for example, or a tailings company, they deliver like a box and they say it's plug and play to a mine, and then it sits there and it doesn't work and everyone just threw money in the ground.
Good nesting ground for the birds.
Yes. I've been to several mines before, and they're in the box sometimes 2-3 years later. So one of the kind of developments that I noticed in Zambia recently, so Vedanta has recently retaken control of Konkola, which anyone who knows Zambia, it's probably one of the most, if not the most important mines in the country. They need to put $1 billion more into that mine to get it up and running. I mean, I've speculated that Anglo American might be coming back to the country in like a larger way beyond just the joint venture with minerals. But yeah, I think it was back in 2019 there was rumors going around that Jubilee was going to get involved with Concola. Are you potentially talking with Vedanta at the moment?
Well, I think it would be a miss from us not to be talking to Vedanta and Concola for many reasons. One, Concola holds the largest waste portfolio in all of Zambia.
Exactly.
And coupled to the fact that we already, we've been working with Vedanta before even the Concola. We've had reviews of Concola over many years. We've tested their product. Our waste rock project is on the outskirts of Concola.
Yeah.
There's a lot of synergies that we and they have.
So yes, you are. And we can expect an RNS soon. Is that the real answer? I don't know, Leon. I feel like you can't say everything you want to say, and I'll keep asking questions that you potentially don't want to answer. I find it very fun. Back in February, China was offering to spend more than $1 billion modernizing the Tazara Railway to link the port at Dar es Salaam in Tanzania to Zambia's copper belt. So it's like 2,000 kilometers long. I mean, every single day, but this is February, but every single day it feels like more and more investment is pouring into the country. And it almost seems to me that you're a landlord of the largest real estate, essentially, and you're benefiting from all of this investment without investing it yourself. I mean, the value of what you have in Zambia is becoming more valuable without you actually doing anything. Maybe that's foresight, but it's also would you say quite fortuitous, quite lucky, potentially?
Well, absolutely true. The investment to Zambia is definitely stepping up because the environment is created. Not only is copper being, regarded as many as a critical metal, critical for the future, but coupled to the environment in Zambia. You're right. Zambia is landlocked, so the more investment into infrastructure, getting your product out and your goods in, up values your operations and your projects inside of Zambia. I think where we are right now, yes, of course, many of our assets would have been overlooked by investors because they couldn't quite see how would you get the copper out of those assets. Now with Roan showing that this is how you get copper out of waste rock, with Monkoe showing this is how you get copper out of this type of reef, and there's so much of this reef around, it definitely is starting to shift the spotlight. For us, it's not good news at this stage. It's more news that we have to move faster. We have to move faster to secure what we believe we should secure faster. And because you are right, the time is coming where these assets would be particularly valuable because of the portfolio we've put together, plus how they are extracted, how the copper is extracted out of those assets.
So last question for you, because I feel I've taken up enough of your time, Leon. 12 months from now, where do you want to be with Jubilee? What's happening with the company? What have you achieved? Are we looking at, do you want to say, you're hoping that we're looking at 25,000 tons of copper. Chrome is ramped up to 1.5 million, or whatever it happens to be. PGMs are going well. The RH deal is progressing. I'm just putting words in your mouth, really. What do you want to be saying to me a year from now?
I think a year from now is I would feel successful if we are a company that secured a significant portfolio of open pit copper mines, coupled to a very successful, the largest waste rock project in all of Zambia. And 25,000 tons a year is a distant past. We have surpassed that number. Then we've become successful because we've demonstrated that a company can build a portfolio of copper that is not traditional, it's more profitable, and there's many more of it. So it really becomes an example of how to establish a copper company at size, on resources, overlooked by industry.
So, and then when we're talking about 25,000 tons of copper, just maybe you don't have the maths in your head. At the moment, we're trading at, I think, like 4.2-ish US dollars for copper. How much profit do you think that's going to be on an annual basis? Is there something you can say or not yet?
Well, it's not that it's the how much, it's what we expect. So, I mean, for us, we believe that with the portfolio we have, that we can make copper at a margin of no less than 25% of trading value. And that's the margin we believe justifies the investment we're pouring into the region and into copper in Zambia. And you can multiply that out. What that means at 25 or 50,000 tons of copper at prices of $9,000 and 10,000 tons of dollars a ton of copper.
I mean, I've done the maths. I won't say it here. I'll let other people get out their calculators. But it seems that with your market capitalization you are trading at 5.5p a share, £166 million market cap. Seems like very good value. I mean, you'd agree with it because you have to. So I can say it seems like a steal at this level. Incredibly cheap.
Well, I can factually say I agree with the buying shares.
You add a premium to what we are now. Was it 6 months? Yeah.
Yeah, quite correct. I firmly believe, if we deliver what we say we can, our market cap does look ridiculously low.
Ridiculously low. Well, on that note, Leon, it's been lovely to chat to you. Let's catch up again in a few months' time.
Excellent. Thank you, Charles. Thank you so much.
Bye.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.